US markets react positively to President Trump's latest steel and aluminium tariff announcement, but uncertainty remains. Gold hit a new record high overnight, and the British pound continues to weaken following the Bank of England's rate cut last week. That's coming up in our 5 Things in 5 Minutes on Tuesday, February the 11th. And then, in today's bonus deep dive interview, ANZ senior commodities strategist Daniel Hynes unpacks the implications of Trump's 25% tariffs on aluminium and steel, if enacted, and who might be the winners and losers.
The consumer in the end is going to be the one who suffers ultimately through rising manufacturing costs.
But first, in 5 and 5 with ANZ, global markets are focused this morning on US President Donald Trump's announcement that 25% tariffs will be placed on all US steel and aluminium imports. As of 4 a.m. Sydney-Melbourne time, the S&P 500 was up 0.6%, led by tech and shares of US metals producers. ANZ head of G3 Economics, Brian Martin, says the market is trying to look on the bright side of Trump's announcements. He says a sector approach to tariffs may have less of an inflationary impact than universal application. Markets are also weighing up benefits from potential reciprocal tariff arrangements.
When you look at the trade-weighted tariff in Europe for non-agricultural goods, it's 2.3%, and in the US it's 2.2%. So markets look at these type of data and going, well, possibly the tariff tensions won't be as bad if the president deploys a reciprocal tariff arrangement. In addition, it's also thinking, well, if President Trump and his cabinet want to pursue a reciprocal tariff arrangement, that could mean that the EU, China, other countries, they all cut their tariffs to match that in the United States.
As of 4 a.m. Sydney-Melbourne time, the US dollar index was up 0.24%. The Aussie dollar was up 0.08% at 62.76 US cents, and the Kiwi was down 0.21% at 56.48 US cents. Number 2, gold hit a new record high overnight of $2,937 US dollars an ounce. Brian says while the market reacted relatively positively to the tariff news, it hasn't halted a flight to safety.
There's just huge uncertainty out there at the moment. What's going to happen to tariffs? What's going to happen to inflation? What's going to happen to economic growth? What's going to happen to interest rates? And as a consequence, I think there's a feeling go back to basics, and the gold complex offers that safety for investors at the moment.
Number 3, the British pound, or sterling, is having a tough time versus the US dollar, with the Bank of England cutting interest rates as the Fed holds. ANZ head of FX research Marjabeen Zaman sees sterling's weakness continuing.
We see further pain in store for the sterling as growth continues to stagnate, and the BOE has also turned more dovish. Of course, we've got Q4 GDP production data, which will be closely watched. But, on the activity side, we have seen softer PMI in recent months, and all of that really supports the slow growth narrative. So hard to see the sterling supported in the near term.
Number 4, Marjabeen says the market is focused on one particular member of the Bank of England's Monetary Policy Decision-Making Committee.
One of the more interesting things that came out of the Bank of England meeting was that one of their BOE members, Catherine Mann, who has always been very hawkish. I mean, she converted in a big way, voting for a 50 basis points rate cut. So clearly the board has broadly switched to being dovish across the board.
Number 5, consumers in China remain cautious during the key Lunar New Year holidays just completed, says ANZ economist Vicky Xiaozhou, who's dug through the transaction figures for spending on movies, flights, cars and appliances in China. She says deflation remains an ongoing issue.
Per capita per day holiday spending during the Chinese New Year holiday was lower than the level in 2024. The average price of movie tickets was still below the level in 2022 and 2023. Flight fares have also fallen, with both domestic and international flight ticket price decreasing by more than 10%. The lower price reflects consumers are being price sensitive and cautious in their spending. Overall, deflationary pressure is likely to persist in China, and we forecast the CPI inflation at a year average of 0.3% in 2025.
Vicky Xiaozhou there. Now, in today's deep dive interview, ANZ senior commodities strategist Daniel Hynes unpacks the implications of Trump's tariffs on aluminium and steel. Of course, they have to be enacted, and who might be the winners and losers.
The consumer in the end is going to be the one who suffers ultimately through rising sort of manufacturing costs. But as we've learnt already this term, what Trump says and what Trump does is two completely different things. So we'll have to see how things play out, particularly with this sort of moratorium on Canadian and Mexican tariffs that he announced after after the initial levy was placed on all imports and how these new steel and aluminium ones integrate into that. But certainly Trump pushing that America First agenda, and certainly on the aluminium side, their industry has been suffering from a lack of competitiveness, I suppose, which has resulted in those imports really starting to build over the recent years.
How important are aluminium imports in America's economy? Because aluminium is one of those commodities that often turns up in a lot of consumer goods, manufactured goods. I'm sure there's an awful lot of Americans sitting down in front of the TV watching the Super Bowl today, drinking from cans, aluminium cans of beer.
Yeah, look, aluminium is one of the most diverse sort of products across any economy, really. It's lightweight properties, but its strength and conductivity means that it's used in packaging, transport, the electricity market as well. It's a very broad sort of consumption base. So there wouldn't be a consumer that would not be hit by high costs, particularly on the aluminium side. So it's high stakes, I suppose, for Trump and these tariffs.
What about the exporters of aluminium and steel into the United States? Because there has been some tariffs around before, and Australia, for example, I understand, was carved out of the last aluminium tariff. So who might be the losers here?
Well, funnily enough, it's Canada, which stands to lose the most on the face of it. It provides about 60% of all US imports of aluminium and a good chunk on the steel side as well. I think about a quarter of all US imports coming from that country. So that stands to lose the most. China does a little bit of aluminium as well as some Middle Eastern countries as well. But clearly that North American sort of NAFTA region is the one to look out for. Look, Australia exports a little bit as well. Not a huge amount. I think 1.5 million tonnes of aluminium and a little bit of steel products going into the California market. But really, as you said, they had a carve out after the previous tariff. We'll have to wait and see whether that happens. But I don't think the Australian impact would be that significant to the market, considering the volumes coming out from other countries like Canada and Mexico.
And just thinking more broadly about demand for metals globally and whether these moves by Trump will cast a shadow over, what had been a pretty bullish outlook for critical minerals.
Yeah, no, it's interesting. Certainly just in sort of recent weeks of trading, we've actually seen metals perform relatively well despite the ratcheting up of these sort of trade tensions. So I do think the market is discounting, I expect, the ultimate impact on demand, considering that they know Trump's playbook of bringing forward these initially high tariffs and then working back towards what ultimately will be the cost to the industry. And in the past, it's been small. So I think that's sort of the factor that we're coming in now. But when you look at the broader sort of prospect, I suppose, we do see a lot more momentum in other sectors really benefiting demand for the metals market. Most importantly, this, I suppose, electrification of the global economy continues at a high pace. In the US in particular, they have got a huge pipeline of AI and data center build-outs, which require a huge amount of infrastructure and energy, and copper and aluminium really suit that sector quite well. So we do think that that dynamic is going to offset what we think ultimately will be really just minor sort of impacts, more so on the trade side for a lot of these commodities in the shorter term.
Daniel Hynes there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, February the 11th. Catch you tomorrow as we look ahead to how the January CPI data in the United States could affect US rate cut expectations. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.